All right, guys, this is Paul Singh, the market speculator with bullsonwallstreet.com. The FANG stocks earnings reports and reactions are in, and today we're going to talk about how to trade these guys post earnings. So let's take a look at them. Basically, a 50-50 split in terms of positive and negative reactions to earnings. And the interesting thing is they don't really relate to how good the earnings were. I think the earnings were great on all four of these, but the market tends to react really funny related to some of these things. So first, let's focus on Netflix and Facebook, which were the gap ups. Then we'll talk about Google and Amazon, which were the gap downs. So with Netflix, I am actually in Netflix right now. This was the first one to report, had this huge, fantastic reaction to earnings, broke out to highs. Now, ran up to 190, maybe 191, 192 here. And at this point, you can't really do anything. When the thing has gone from 160 to 190, when it's broke out here from 176 to 190, you really got to wait for a good entry. So I was waiting for a pullback, and we know that round number 200 is up here, and that can act as a good target. Often you get these magnets to these major levels, as we've seen with Facebook, Amazon, and Google at that 1,000 level. So we were looking for a pullback. We got that on Thursday. The whole market, especially tech, was getting crushed. Hard move into this range here, which can be tough to trade, these violent moves. We always hear we want the orderly pullbacks, but sometimes these violent moves can give you these good entries. So that's what we did here with Netflix. Held the 9. We got in, I think it was 183 or 184. Now I'm using a loose stop. I don't want to get shaken out if it pulls back in here. So I'm using the test at the bottom of this range, 174, 175. So I'm risking 8 to 10 points in here. But target-wise here, this has positive news. This thing could really run. It's got some stuff behind it, and I don't have the volume on this, but it's got a fantastic recent volume pattern after getting crushed in here. But if it floats to 200, we've got about 2.5 to 1. We can get a 16 to maybe even a little break, a 20-point move here. So that's what I like about Netflix. We're in this one, and if you haven't traded it, watch how it reacts to the 9. If it does pull back in here, watch how it reacts to the bottom of this range. 2 key levels for you here. And then you could add a third if you really are cautious here. Wait for the break of 190 and just play the run to 200. Maybe use a $5 stop. So you'd be getting 2 to 1, $5 a risk, $10 a gain. So that's the idea behind Netflix here. Facebook, essentially the same pattern. Didn't get crushed as badly as Netflix, although it did pull back in here. Broke out to highs, and now very extended, but broke out in here. This one, I would wait for more of a consolidation and then play the break of 175, or watch how it holds this gap level if it does eventually pull back to this 165 range. So keep an eye on that. So it's going to be easy trade if you get the entry. Essentially, wait for this range here, see if it holds, get in. It'll be low risk but very high reward, or wait for the break of 175 and maybe try to play it to 190, 195, close to 200. It's interesting how these guys are both. 2 of them are at 1,000, 2 of them are getting to 200. Now, Google and Amazon, these guys are the gap downs, and they're fantastic stocks. If you go back the last, I don't know how many years, these gap downs are buying opportunities. Now, for swing, you really have to time it and look for the entry because you could get stopped out. But if you're, as an aside, if you're a long-term position trader or building your 401k or your nest egg, whatever it is, use these dips to add to your core positions here. And that's what I do with my long-term stuff. But anyway, with Google here, we got the gap down, and then it pulled back all the way to 940. Now, what I'm watching here, and I talk about these gap down overreactions, and I really like the stock, but I'm still going to wait for an entry signal. I'm not going to get in just because it gapped down. So my entry signal here is if it can cross back up over the 50-day moving average. So I'm watching 970 to 975 very closely, and we're at 958 right now. So if we can get to that level, we could see a really quick run to 1,000, and if it breaks 1,000, this thing will really take off. So we could get a huge move if we get the entry signal. So be patient, wait for that signal, and then pounce once you get it. And Amazon is the same thing. Now, Amazon just reported, so you see the big gap down. It doesn't have a pattern yet, but if it pulls up, even if it does it today, if it does it tomorrow, whenever it does it, if it pulls up over the 9, that will be the trigger to get in, and we could see a nice run. The other way this thing could go is it could continue down, and then we'll have the same setup as Google, where it needs to hold or remount the 50-day moving average, and then we would get in. So these are really easy patterns to play. We just got to sit back and wait for them to emerge. If they never do emerge and these things continue to go down, we'll flip our bias towards these stocks, but we will not have traded them yet. So wait for the entry signal. We know exactly what we're looking for. If they do trigger, they're going to be very easy, no-brainer trades. Low risk, high reward. All right, guys, that's it for this week. Remember, there's a trade report every day that I send to trade report members with all our focus list stocks, our videos, what we're looking at to trade, what we're looking to trade, and then trade alerts intraday. And then I'll see you guys next week with the new weekly report video.